let's talk about the IT sector. In fact, it was one of the top gainers in terms of sectoral indices yesterday, the sector being up over 4% in trade after HCL Tech reported its results yesterday, wherein the numbers were majorly in line with expectation. But let's also take a look at some of the other key earnings in the IT space. We have the likes of LTIMindtree and Persistent just reporting its numbers right now. We have Puneet joining in with more details on both.
Well, thanks for that. So LTIMindtree came out with earnings yesterday, held a conference call as well, and the results were actually weaker than expectations. We've also seen that revenue was just up about 1% in this particular quarter, coming in at 9,770 crores versus estimates of almost 9,900 crores. So a miss on that aspect. Revenue growth was slowed down due to a slower ramp up in deals, basically, as well as a cautious client spending outlook as well. We also saw the EBIT margins for the company just up about 1% at 1,345 crores, missing estimates of 1,428 crores. So the overall EBIT margins came in at 13.8, was the estimates of 14.4%, and net profit also was just up about 4%, coming in at 1,128 crores, missing estimates of 1,171 crores. Now, the constant currency revenue growth for the company actually reported a fall of about 0.6% on a quarter-on-quarter basis. They were also mentioned that any kind of benefit which they had from operating efficiency programs that they had been running over the last few quarters were offset by the revenue decline in this particular quarter, and most of those costs have been passed on to its clients. Revenue growth has also been, on client cautious spending. That's been another key negative. When you look at the segmental performance, while BFSI grew 1.2% on a quarter-on-quarter basis, segments like technology, media, as well as communications fell by 1.5% on a quarter-on-quarter basis, as well as the healthcare vertical fell almost 14% on a quarter-on-quarter basis. So definitely a negative there. While order inflow was largely in line, $1.6 billion for this particular quarter, the attrition was also largely in lines at 14.4%, but the headcount was lowered in this particular quarter and the management highlighted that they had done proactive hiring in Q2 as well as Q3. So largely, brokerages are also mentioning that a large deal closure in the next quarter is what the management is expecting, and that might be the only silver lining. But overall, stock might be under pressure today based on Q4 earnings.
Okay, it is a miss that we are looking in terms of where LTIMindtree is, but let's also see how Persistent Systems reported its numbers. We are looking at a revenue growth of around 5.9%. This is on a sequential basis that we are seeing, while EBIT margins, if we are looking at, they stood at 15.6% as compared to 14.9%. Net profit, however, saw about a 6.1% of a growth here. Do note that the company just came out with its numbers in the early morning today. But other key earnings in focus, and we have Harsh joining in with details on the likes of Tamil Nadu Mercantile Bank, Bajaj Housing Finance, and more. Harsh, what are you picking up?
Well, the lenders are coming out with a decent set overall. Tamil Nadu Mercantile Bank saw a bit of a decline in its net interest margin, and the numbers will flash on your screen as we speak. So your net interest margin has come down from 4% to around 3.87% for Tamil Nadu Mercantile. That's the margin shrink we've seen. When you're seeing operating profit, it's up 10% YOY, so double-digit growth there. Nonetheless, largely led by other income, where the growth was 22% YOY. Let's look at profit after tax, up 15% YOY, not a bad number at all. And your ROAs are inching 1.81% now versus the 1.7% number same time last year. So inching up slightly. When you're looking at Bajaj Housing as well, very similar kind of trajectory. ROA is inching up to 2.4% versus the 2% number same time last year. Loan loss provisions largely contained at just about 30 crore. Good growth on the net interest income number, 31%. Operating profit up 43%. So operational metrics playing out in favor of Bajaj Housing. The profit after tax number was up 54% on a YOY basis. The other one is 361 WAM, where, of course, we had an announcement with regard to acquisition of UBS India business, but outside of that, we've seen a decentish kind of move on the earnings as well. Brokerage income was impacted YOY. Brokerage income was in fact down 31%, but results not altogether bad. Core profit was slightly in line, or rather just about in line. Transactional revenue was at the upper end of the guided band of 100 to 150 crore. So that's come in at 150 crore, which is a key positive, and we've seen growth across the board. So that's the other positive. Profit after tax just up 4% YOY, but up nonetheless at 250 crore. Canfin Homes, last up, decent growth clip that the company has clocked 6% YOY on the net interest income number, operating profit up 8% YOY, profit after tax slightly above estimates at around 12% YOY at 234 crore. The ROA number, again, the inch up is solid, 2.6% ROA clocked by Canfin. Something to look out for. Asset quality metrics largely steady. In fact, GNPA has inched downwards, so did NNPA. The margins have inched upwards in a quarter like this. Advances up 9% YOY.